I'm Zoppi, an English qualified solicitor specializing in mergers and acquisitions, and in this video, we'll discuss how I would buy a business with no money down. So firstly, I would use the target company's cash in the bank to fund the completion payment. Likely, the company is going to have cash in the bank. The seller, if they want to extract that money pre-completion, would likely end up having to pay income or dividend tax on that money. Instead, I would encourage the seller to leave that money in the bank and let us use it to fund the completion payment. For the seller, they would end up paying less in taxes, as low as 14%, because instead of paying dividend or income tax, this will be seen likely as a capital gain on their shares. The second main thing that I would do is use the target company's assets to raise finance against those assets. So I would give the company's assets as security to a traditional lender like a bank, and would raise finance against those assets, which is going to complete on the day of completion. So simultaneous to me becoming the owner of the business, the lender takes security over those assets and gives me that money. If this is still not enough to cover the completion payment, then I will look to family, friends, and angel investors to raise, for example, equity finance. Then, assuming I've tried my best to lower the completion payment, I will defer as much of the purchase price as possible. This is typically referred to as starter finance because I will owe the seller. So the seller is effectively giving me a loan. Now let's talk about earnouts. So earnouts are a contractual provision, typically in the share purchase agreement, the SPA, where part of the purchase price only becomes payable if the target company achieves specific financial targets. For example, the company makes enough profit above a certain threshold target. So that's how you buy a business using none of your own money, even when dealing with a difficult seller. If you've got any questions, please do put them in the comments below. I promise I will answer any questions you may have.